Chris, thank you for joining us today. I'm looking forward to speaking with you.
Excellent. Thank you for inviting me.
So why don't we start with your personal background? Can you talk about how you got into the field you're in and your career path to this point?
Sure. I started my career in affordable housing in New York City. I was at the Department of Housing Preservation and Development, and then I went back, got my MBA, and then went straight into a real estate private equity fund called Arixa Capital, and I was there for about 14 years.
Tell us about where you are now. Talk about RealtyMogul and what you do there.
Well, RealtyMogul is a fintech company. We raise capital on behalf of real estate operators, and I'm the chief investment officer.
What are some of the types of properties that you like to buy?
About 65% of what we do are value add multifamily and secondary and tertiary markets. We also do development, and we'll do office, industrial, retail. We do not do hotels. And every now and then we'll do something unique. Last fall, we launched a cannabis REIT, which was very successful, and they've recently IPO'd.
When investors participate in one of these syndications, what can they expect in terms of returns, the cash flow? How do you outline what they're trying to get, and how do they choose which investment is right for them?
We always post a projection of IRR and cash on cash that the sponsor provides, and we do our own secondary vetting of their underwriting. If it's in a prime market, if it's a fairly newer product, those returns might be a little bit lower.
So there's a local operator who is found the project and is sort of running the project. Are they typically investing as well?
Yes, we have about 75 operating partners who have gone through our system. We require, usually it's about 10% of the co-invest. We like that to be net of any acquisition fees that they receive. But regardless of the size, we do require a minimum of $250,000.
And when we were talking before, you mentioned that sometimes you are investing a smaller portion of the total in a project. So you and all of your investors are a minority of the total. And sometimes it sounds like you're the great majority of the total.
Yeah, we can be 90% of a $15 million transaction, or we can be 20% of a $170 million transaction. Our minimums are $3 million. And the largest raise we've done to date is close to 15 million.
And is it hard to find these types of projects, or are there lots of them out there?
We've been extremely lucky with this low interest rate environment. We've seen a lot of really great opportunities, a lot of demand from sponsors to put deals on our platform, especially over the last year. There's not a lot of capital out there that can write a $5 to $10 million check. If you go above $10 million, there are a lot of large private equity funds that can fund that. If it's less than five, a lot of sponsors can kind of go to their country club and raise it amongst their friends. But the mid market can be very challenging to raise that, especially in the required time frame of a typical real estate transaction.
How would you characterize real estate investments among all the different types of alternative investments out there? What do you think would be realistic expectations of real estate investments like the ones we've been talking about?
I personally believe, and that's one of the reasons why I'm in the industry, is that especially value add multifamily is a really terrific risk-adjusted return, meaning the return relative to the risk seems like a very good value relative to other investments that are out there. I just think it's a lot of fun. It allows being able to invest online. It allows people to build their own portfolio. We have some investors that have 25 or 30 different investments. It has allowed individual investors to be able to invest in institutional quality assets. And as the business has scaled, we're kind of in this amazing flywheel moment right now where we're able to raise more capital so we can the more capital we raise, the more attractive we are to institutional quality sponsors. The better deal that we can market and the better sponsor that we can market, the more institutional investor we can attract. So we're in this really amazing growth period right now, which is really exciting.
If you look out 5 years from now, what do you see in the area that we've been talking about for your company, for our industry? What are some of the things you think we'll see in the next 5 years?
I think that our industry is going to completely disrupt the way things are done now. The private equity closed-end fund model, I think, is going to, as we're starting to compete with these billion-dollar funds, I think that industry will survive in some way, but things are going to look very different. Also, we're just now starting to be able to tap into global markets. Fintech is about 3 or 4 years behind us in Japan. They're fascinated with it. We're trying to figure out a way to, connect. It's a little more complicated because of, SEC rules. There are groups that are using blockchain technology to make that a lot easier. I'm on the board of one of them. So the whole industry is going to look very different 5 years from now.
Chris, thank you so much for your time.
My pleasure. Thanks for inviting me.
I'm Jan Brzeski, and you've been listening to Beyond Wall Street.